In the name of Allah, the most beneficent, the most merciful. Honorable Governor, State Bank of Pakistan, Dr. Raza Bakir, Deputy Governors, State Bank of Pakistan, executives, and senior officials of State Bank, esteemed guests from the industry, my fellow colleagues, ladies and gentlemen, Assalamu alaikum, and a very good morning to all of you. Today's proceedings will commence with the recitation of sanctified verses from the Holy Quran. I invite your kind attention, please.
أعوذ بالله من الشيطان الرجيم بسم الله الرحمن الرحيم الحمد لله رب العالمين الرحمن الرحيم مالك يوم الدين إياك نعبد وإياك نستعين اهدنا الصراط المستقيم صراط الذين أنعمت عليهم غير المغضوب عليهم ولا الضالين.
Sadaqallahul Azim. Let me now request Mr. Arshad Mahmood Bhatti, Executive Director, Banking Policy and Regulations Group, State Bank of Pakistan, to deliver his welcome address.
Bismillahirrahmanirrahim. Honorable Governor, State Bank of Pakistan, Dr. Raza Bakir, distinguished panelists and guests, Assalamu alaikum and good morning. I am immensely delighted to welcome you all in this August gathering of banking, fintech, and business community. I feel delighted by stating that the year 2022 marked the beginning of a new era in banking industry in Pakistan, with the launch of licensing and regulatory framework for digital banks. The framework provides details for setting up digital banks and covers essential guidance and supplementary regulations. State Bank has finalized this framework after an extensive consultative process. Earlier last year, State Bank released an exposure draft of the framework. A target survey was also launched to invite feedback from a wide range of domestic and international stakeholders. Subsequently, a number of meetings were held with stakeholders to further enrich the consultative process. Let me share with you certain key features of the framework. The framework primarily is focused on setting up a digital full bank through a process of graduating journey of digital retail bank to digital full bank. Retail banks would be offering services to retail segment only, including SMEs in particular, agriculture, and individual customers, while full banks would be offering services to all sort of customers, including corporate and commercial entities also. State Bank may also consider direct licensing for digital full banks as a subsidiary of an existing domestic bank or an international bank. Further, based on viable business proposition and satisfactory digital financial services experience, traditional banks as well as microfinance banks may request State Bank of Pakistan for conversion of their institution into a digital banks. A specific provision has also been incorporated in the framework for conversion of electronic money institutions with a minimum 1 year of experience into a digital retail bank. Next, I would briefly touch upon various transition stages for a digital retail bank. The process starts with submission of complete application to State Bank of Pakistan. State Bank will issue a no objection certificate with a validity of 6 months for incorporation of proposed bank as a public limited company. After incorporation, the entity may approach State Bank for in-principle approval, which would be valid for 12 months, during which the applicant would carry out its operational readiness. Once it is ready, the entity would be granted a pilot stage license, which has a restricted utilization. And this pilot would span from 3 months to 9 months. After successful completion of the project, the bank can be licensed for commercial operations, which will be for minimum 3 years period of full financial services. Now, one of the distinguished features is that setting up digital banks will also require less capital relative to the brick and mortar banks presently in existence. And this would encourage new technology-oriented entrepreneurs to enter this realm of business. Minimum capital requirement for digital retail bank would graduate from 2 billion at commercial launch to rupees 4 billion at the end of 3 years, providing it a window to enter or graduate into digital full bank, requiring 6.5 billion of minimum capital requirement at commencement of the digital full bank operations, and then completing the journey of rupees 10 billion capital requirement within 2 years. Now, let me inform you that this license is also available for the Islamic variants of the customers who will be offering Islamic financial services, while the conventional digital banks can also offer Islamic services through their Islamic window. In line with international practices and overall banking situation in our country, State Bank has decided to initially issue up to 5 licenses of digital banks. Applications in this regard are being accepted up to 31st of March 2022. State Bank expects digital banks to play an important role towards an inclusive and efficient financial ecosystem in Pakistan. I'm sure today's session and interaction with the panelists would give the participants further clarity on the topic. Thankful to you for your valuable time in this session. Thank you. Over to Zila.
Thank you, sir. Now I would request the Honorable Governor, State Bank of Pakistan, Dr. Raza Bakir, to please share his valuable thoughts with us.
Bismillahirrahmanirrahim. Assalamu alaikum. It gives me great pleasure to welcome you all to today's event on digital banks, a new era in Pakistan. Let me in particular welcome and thank our moderator, Mr. Nadeem Hassan, and our esteemed panelists, Mr. Muhammad Aurangzeb, Ms. Tania Adrous, Mr. Kasif Shahid, and our very own Akhtar Javed for participating in today's event. And let me warmly welcome all the registered attendees to this event who will have an opportunity to ask questions, as well as all of those who are watching this event on Facebook now or who will watch it later as a recorded version will be available. We are hosting this event today with the primary goal to bring attention to the digital bank licensing framework that the State Bank of Pakistan introduced at the beginning of this year. As we bring awareness to this session, we have 2 key audiences in mind for today's discussion. The first is the people of Pakistan. The people of Pakistan who we want to be happy customers of banks, particularly those who may not yet be in the banking system. Our second key audience for today is potential investors, both domestic as well as international, in our digital banks licensing space. And for this reason, including because we want to make sure that our licensing framework is available to international investors and we welcome their interest, we are going to be conducting today's session in English. In my keynote address, I would like to make 3 points. First, I would like to share what are our key goals and aspirations as a regulator in introducing this licensing framework for digital banks. Second, I would like to talk about how this licensing framework for digital banks sits in and within the context of a number of other measures the regulator has taken recently to promote digital financial services in the banking industry in Pakistan, and how we see that this framework and digital banks in Pakistan will be part of an ecosystem that is rapidly evolving. So that'll be my second point. And my third and last part of my keynote address is to give a few messages, both to potential investors in the digital banks space in Pakistan, and more importantly, to the people of Pakistan, who I hope will benefit tremendously from the creation and licensing of digital banks in Pakistan. So let me begin first. What are our goals as a regulator in introducing a digital banks licensing framework? I want to start by comparing a little bit about how Pakistan's banking and financial system compares to other countries internationally. And the first point that I would make is that we stand out for a banking system where profitability is abundantly high, where non-performing loans are low, where other performance indicators of financial soundness are high. One key fact that I would like to bring everybody's attention to is that Pakistan as an emerging market has in its history experienced many balance of payments episodes. And in these episodes, many times Pakistan has also needed to get international assistance. But our history is striking that despite our macroeconomic challenges that have periodically risen, our banking system has by and far remained sound. And this is in contrast to the experience of many other countries internationally that have had macroeconomic problems. Let me take you back to about 10 years ago when we had the global financial crisis. And let me remind you that that event began with the collapse of a bank, Lehman Brothers, in an advanced economy. Let me also remind you many other countries that experience financial stress, such as Ireland and other advanced economies. When Ireland had an IMF program, it also had a banking sector that was in deep crisis, and a large bailout had to be orchestrated for its banks. My point with these examples is to bring attention to the fact that when looked at in an international perspective, Pakistan's banking system is one which is profitable and which is by and far sound. While our banking system has had these positive attributes, at the same time, it has not achieved or not realized its full potential in serving the people of Pakistan who need access to banking services. Let me illustrate this with one statistic that is often used to illustrate how well are people able to access a banking system of a country, and that is the number of accounts. According to State Bank of Pakistan's data, as of December of 2020, Pakistan had about 82 million active deposit accounts. This includes accounts in banks, in microfinance banks, as well as mobile accounts. Now, in July of 2017, about 3 years earlier, this figure was about 50 million accounts. So in other words, in about 3 years, we had a growth or an increase of about 30 million accounts, or which is roughly around 64% increase in just about 3 years. A big reason for this growth in accounts was the increase in mobile phone accounts. Now, on the one hand, this is very impressive growth in the number of accounts, but at the same time, some other statistics show that this is well below Pakistan's potential. As of December of 2021, Pakistan had an estimated 189 million mobile subscribers. So even if we account for the fact that some people may have more than one telephone, more than one mobile phone, the statistic that I want to bring your attention to is that there are easily about 50 to 100 million mobile phone subscribers in Pakistan right now that don't have a bank account. And this is one illustration of the potential that we have in front of us. Some other key statistics show that Pakistan is primed for a digital banking revolution. For example, our tele-density is estimated at about 86%. It is estimated that 108 million, we have about 108 million 3G or 4G subscribers. We have 109 million mobile, we have 109 million broadband subscribers, and we have an internet penetration estimated at around 50%. So of a country of around 220 million people, these are statistics that are designed to indicate the potential that exists for Pakistan's banking system to reach out and touch the majority of Pakistanis, which are not yet in our banking system. Now, just going beyond bank accounts, let us look at indicators of access to finance. And in that also, I think the point that comes across is that we have not yet reached the potential that our banking system has to intermediate and to provide financial services to Pakistan's consumers, households, and businesses. According to the World Bank data in 2020, private sector credit in percent of GDP was around 17% in Pakistan. Now, this compares to an average for emerging markets of nearly 50% of GDP. In other words, in Pakistan, this figure was less than 1/3 of the average for emerging markets. And if we compare ourselves to some other emerging markets, some comparable emerging markets, such as Brazil, that ratio is about 75% of GDP. Turkey, that ratio is again in the same range. Another indicator of access to financial services is lending to the SME sector, small and medium enterprises, in percent of total lending. This is about 6% for Pakistan, according to 2020 World Bank estimates. And compare this to Brazil, where this number is 36%, to Turkey, where this number is 32%. Another indicator, mortgages. Mortgages are about 0.7% of GDP in Pakistan, though now rising rapidly. And this figure is about 7% for emerging markets as a whole. So in other words, the level of mortgage financing right now in Pakistan is 10 times below the average in emerging markets. Hearing these statistics, I hope the message that I want to convey is clear, which is that one of our key goals as a regulator in introducing a digital banks framework is to give a positive jolt in our journey to promote access to finance, and particularly for those who are currently not able to access the financial system, and to have new, easy, and digital ways to do so. An essential part of this journey is on improving our customer journey. And I know that Mr. Nadeem Hussain, our moderator, will be talking about it. So in terms of my first point that I want to convey to all of you today about our licensing framework for digital banks is that we are hoping that it will help, number one, the people of Pakistan with opening an account in one bank or in multiple banks. Number two, to easily access banking services, and especially payment services, as well as saving products. And number three, to have access to credit. Now, having laid out our goals as a regulator for introducing this framework, let me speak about the second point, which is how does this framework for digital banks sit in the broader ecosystem of our financial system that we are trying to evolve. The key part that I want to convey is that our framework for digital banks should not be seen as a step in isolation, but rather as part of a number of steps that we have been taking recently to push evolution in our financial system and to push financial inclusion in our financial system. Let me give a few examples. First and foremost is our faster payment system called RAST. As some of you may be aware, RAST is already in a soft launch in Pakistan. Several of our banks right now are offering the ability to make instant payments through their mobile phone apps. Soon, we are going to have the formal launch of the person-to-person payment use case of RAST. And I want to bring attention to the fact that we have decided that it is the subscriber or the customer's mobile phone number which can serve as an alias for people to make payments. In other words, if two people have to make payments to each other, they don't need to remember their full bank account number, their IBAN. Simply knowing their mobile number is going to be enough for them to pull out their mobile phone, pull out their bank's app, quickly go into RAST and make a payment to somebody just using their cell phone number. Second key point that I want to mention about recent initiatives launched by the State Bank of Pakistan is a digital onboarding and common KYC framework. So let me talk about digital onboarding first. About a year and a half ago, Pakistan introduced a revolutionary way to tap and onboard our diaspora called the Roshan Digital Account. For the first time in our history, we made it possible that our banks in Pakistan can remotely onboard overseas Pakistanis while adhering to the best practices in customer due diligence, know your customer, AML, and CFT. That experience allowed us to roll out digital onboarding for Pakistanis resident in Pakistan. I'm delighted that about 22 banks are already participating in this initiative, and some of the banks have already offered the ability for instant biometric on their mobile phone app. As we move forward, we are going to be working with NADRA, our government institution that keeps everybody's identity, as well as our commercial banks, to push a wider availability of instant biometric on the apps of banks. One area, in fact, that we are finding is that as we push our digitization initiatives, one area where we need to push a little bit more is the readiness of banks themselves to adopt these technological solutions that we are offering. A third area that I want to mention is common KYC, common know your customer. One of the challenges that people face in opening a bank account is that each bank has its own KYC, its own forms, its own requirements. So we have been engaged in a conversation with Pakistan Banks Association to standardize this KYC procedure and have one common KYC that once a customer has done that common KYC, that customer will be readily able to satisfy the requirements of any bank in which that customer wants to open a bank account. Now, this should be particularly good news for those who are considering a digital bank license in Pakistan, because it will speed up the ability for you to onboard customers. My last area that I wanted to mention about other initiatives in the banking space is the conversation that we are having with stakeholders on open finance. Open finance, open banking, I mean the ability to allow people with their consent and under appropriate safeguards and security to be able to share their data with other financial service providers. As those of you who are involved in this conversation would know, that State Bank of Pakistan has drafted a policy paper that we have shared with a group of stakeholders that I chair periodically for a conversation of digital financial services. This draft policy paper lays out different options for Pakistan to embark upon its journey for open finance. The key thrust is to allow sharing of information across financial services providers, again, with the key objective to improve the customer journey for the customer in Pakistan. Let me also say to any of those investors who are potentially interested in having a digital bank's license in Pakistan, if you are interested in looking at this draft paper, you are welcome to reach out to us, and we would welcome your feedback as we finalize. Now, this was my second point, which is that the digital banks framework in Pakistan is part of an ecosystem, part of several steps that we are taking as a regulator to promote digital financial services in Pakistan. I want to come back then to my last point in my keynote speech and to focus on what are the key messages that we as the regulator want to give both to potential entrants in the digital bank space in Pakistan and to the people of Pakistan, who we hope will be the ultimate beneficiaries of this digital banks licensing framework. My first message to everybody, to our existing traditional banks that may get digital banks license, to new entrants, is to focus on the user experience. It is said that people think of going to a bank just like they think of going to a dentist. I would encourage those who are interested in a digital bank license to think deeply and foremost about the user experience. The customer is our priority. My second key message is that we are going to prioritize any potential entrants focus on security and fraud protection. The only way we can have sustained growth in our digital banking system is through comfort of the customers that their information is safe and secure, even when this information is shared in an open finance framework. And this is particularly so in a developing country such as Pakistan, where financial literacy is not as high as in advanced economies, and where several criminals find it easy to engage in fraud. We will carefully look at every application for a digital bank license as to how it intends to prioritize security and protect against fraud. My third key message is to focus on the use cases. We should not think of a bank account as an end in itself, but rather we need to focus on the reason that people need or wish to have a bank account. And to this end, if we keep the use case paramount, our players need to think about partnerships that they can make with other players in the financial industry. And they don't need to think that they have to do everything themselves, but to focus on the use case. And if you focus on the use case, you can see how you may want to partner with other financial service providers in the banking sector. And finally, my key message to both traditional banks who may be considering digital bank licenses as well as potential new entrants is that we have priority areas on which we would welcome solutions. These priority areas include, but are not limited to, number one, SMEs, including supply chains, agriculture, women as a cross-cutting issue, both for SMEs as well as in agriculture in many other areas. So we will particularly be looking at how new entrants in the digital banking space intend to focus on our priority areas as a regulator. Ladies and gentlemen, in conclusion, let me end where I started off by talking about why we are hosting this event today. Our goal is to bring awareness to our digital banks licensing framework. As globally financial systems evolve and digitize, regulators have to not only be regulators who are keen and keep as paramount the goal to keep financial systems safe and secure, but they also have to become enablers and in some cases promoters of digital finance. And the State Bank of Pakistan is rapidly evolving to embrace this goal of becoming, in addition to a regulator, an enabler of digital financial services. Digital banking in Pakistan has tremendous potential to touch the lives of the people of Pakistan and to particularly reach out to underserved and those who are not served by the banking system of Pakistan. I'm really looking forward to the discussion that we have today. And I want to encourage everybody to watch the space of digital banking in Pakistan as one that we are very confident is going to evolve rapidly towards a modern digital financial system. Thank you very much.
Thank you very much, sir, for such an insightful address. Under your dynamic leadership, SBP is all set to achieve its long-term objectives of modernization and digitization of our country's financial system. The program will now proceed towards an interactive panel discussion on the potential of digital banks. The discussion will be moderated by Mr. Nadeem Hussain, who is the founder of Planet N Group. Before we move on to the panel discussion, please note that the specific and relevant questions may be asked through Q&A box, chat, or by using the raise hand feature during the questions and answers session. Over to you, Nadeem Saab. The floor is all yours now. Thank you.
Thank you so much, Zelia. Bismillah ar-Rahman ar-Rahim. Assalamu alaikum. Esteemed Governor Saab, esteemed panelists, State Bank officials, and worthy participants. It's my singular honor to moderate this session. I think this is a very exciting time, and the advent of this license potentially is a game changer for Pakistan. But why do I say that? You know, the State Bank has been visionary in terms of its regulatory framework and what they've come up with. 15 years ago, they came up with a specific license for microfinance banks, which has currently resulted in 8.5 million active loan customers. Very few countries actually have a license specific for the microfinance industry. It then developed the branchless banking framework and the PSO-PSP license, which created Kiryana stores into potential bank branches, enabled customer journey, changed the way the customer were doing domestic remittances and paying the utility bills, resulting in more than 55 million wallets. Recently, it came up with the EMI license framework, which inshallah, over a period of time, will also show the efficacy of changing the customer journey. And now we finally have the digital bank license. So from my perspective, the State Bank as a regulatory body and as an enabler has done its work. And it's up to the industry and the participants now to take this opportunity and demonstrate the, and utilize the potential, which I think is huge. Again, why do I say that? If we look at the current status of where we are a country which has 86% GPRS coverage. We are a country with more than 55 million smartphones. We are a country with more than 70,000 unique distribution points as far as branches banking agents are concerned. So these are things that a part of the enabling environment, including a digital identity framework from NADRA. So the ability to onboard customers under the framework that currently exists and the digital bank will provide is huge. What is the opportunity? The opportunity is that despite all that the State Bank has done so far, in a country like of 220 million people, we only have 10 million active loan customers. Huge opportunity under this license to take this number from 10 million to potentially 100 million and change the customer journey. A new to an industry individual right now, when he goes to a bank, new to industry, can take up to 1 month to get a credit card or a personal loan. This should be done in minutes. And this license, assuming the practitioners use it wisely, can totally change the customer journey. Similar SME, which is a very large percentage of our GDP as far as contributors, only are at 6% of the total banking lending stock. Huge opportunity again, other than for individuals, for the S of the SME and the SMEs under this license to change the customer journey and make a huge impact, enabling further economic growth. So the view is that the enabling environment has been set by the State Bank's previous regulations and the digital bank license. It's now up to practitioners who get this license to show how they're going to change this customer journey, how they're going to figure out what the common man wants, transparency, ease of access, and the quickness in which we can open accounts and lend money. The opportunity for digital lending, digital savings, digital investments, digital payments, all exist. It's up to the practitioners now to figure out a way how to avail this opportunity. Ladies and gentlemen, I'd like to introduce our esteemed panel today. We have Mr. Mohammad Aurangzeb, who is the chairman of the Pakistan Banking Association, a veteran banker, and also the president of the Habib Bank Limited, which is one of the leaders as far as digital transformation in Pakistan are taking place. We have Ms. Tania Adrous, who has a long history being in Google and totally understands the digital journeys of customers. She's also been the special advisor, Prime Minister on Digital Pakistan, and also is the co-founder of Ryan. We have Mr. Kasif Shahid, again, a veteran banker, spent 25 years in banking in Pakistan and overseas, is the co-founder of Finja, one of the leading digital lenders and payment entities in Pakistan. We'll be hearing from him. And then we have Akhtar Javed, who have had the pleasure of being associated with the last 20 years, Director, Banking Policy Division of the State Bank of Pakistan, who will talk about the regulatory perspective and any questions that we have on the framework itself. I'm going to start with Tania. Tania, you have significant international experience. You work with Google, which are obviously the pioneers of the digital transformation that we've seen. Can you shed some light in that in emerging markets, both in Latin America and if closer to home if possible, what has been the success? How has the regulatory environment through the introduction of a digital bank license changed financial inclusion, changed the customer journey?
Thank you, Nadeem, and Assalamu alaikum, everyone. Pleasure to be here. Thank you, Governor Saab and the State Bank for having me. And I'll echo before I get into the question, Nadeem, just the point that you've made, and also that Governor Saab made, that we really are. We've started 2022 with really this is going to be an unprecedented time for Pakistan when, as far as financial services are concerned. And it's really, the digital banking framework is sort of almost coming as a cherry on the top, because the steps that have happened over the last couple of years, including RAS, including what we've seen with the other licensing around digital payments being introduced, are all sort of coming together in a really beautiful way. And when we talk about challenger banks or neobanks in other countries, Nadeem, I think it's important to understand that we've seen two flavors of challenger banks evolve around the world, and particularly in emerging markets. You have countries that have very clear regulation for digital banking. Those countries include, for example, the Philippines. They've just awarded 6 licenses. Brazil, now, of course, we've all heard phenomenal stories out of Brazil on how well digital banks there have done. South Africa, Singapore, etc. Then you've got a whole set of countries where you have a very large number of digital banks that are actually operating, in an unlicensed, so they don't require a specific license for digital banks. These include countries like India, Indonesia. And I think it's important to understand more broadly that when you introduce specific regulation, as we are doing here in Pakistan, as the regulator is, that what does it enable these players and these digital banks to do? And there's a couple of examples I'd like to talk about specifically. I think starting off with Brazil, and Brazil is top of mind for everyone because we've seen in the last 2 months an incredibly successful IPO from a digital bank called Nubank. Nubank is a total of 8 years old. It started off, within a few years, had already surpassed, in terms of number of active users and accounts, most of the big banks. It IPO'd now with close to 40 million active users, and including not just in Brazil, though the majority of the base comes from there, but also 2 additional Latin American countries. Now, if you really think and hone in on how did they impact the average Brazilian consumer, of course, we've all, and Governor Saab has mentioned a number of items that sort of largely center around making life easier for the customer. And there are really 3 dynamics, right, that you think about. One is simplicity. So ease of usage. How easy is it for me to open my bank account? How quickly can I do it? The other is efficiency. Once I've opened my bank account, how efficiently and easily can I access all of those services? Things like utility payments, other bills, etc., sending other people money. And then the third is security. I'm trusting a digital bank, a relatively new player, with my money. How confident can I be that that money will be kept safe? What's phenomenal is that you've seen brands like Nubank, and that's just the one that we heard being talked about, the most. But you'll see about 10 additional digital banks in Latin America that have really gone after specific use cases that center around these 3 things. So simplicity, access, efficiency, security. And these relate to all the way things like your basics, but then also come down to areas like lending and credit. We are no different from Brazil in that you've talked about this, Nadeem, that really, if you think about the why will a Pakistani citizen ultimately want to sign up with a digital bank? Right? Of course, they want their life to be easier. The reality is they want access. They want access to credit that they're not currently being able to get from the formal banking sector. And currently, they're needing to go to the informal sectors to be able to get that. And we all know how that plays out. And there are a whole list of other examples. You look at South Korea and what they've done. Kakao Bank, within a year of launching in 2017, had 10 million customers. China, I won't even talk about because we often the scale is so different. India, which which is actually an unlicensed environment. India has about 7 digital banks right now, and in total have brought on millions of users. So I think what's really important here is how we really capture this sort of triangle and bring it together, right? The regulator and the state bank has really started to play that role. I think the other 2 elements of the triangle are people, the players that are going to go in and be successful recipients of the license. How quickly can they execute? How well can they execute against these critical use cases that the Pakistani citizen needs? And then the third point of the triangle is investors. You need a very large amount of growth capital to start to change the mindset and behavior of users. So, we're seeing these three come together in a really meaningful way. And I think that there's magic about to happen in the country. So very exciting time.
Thank you, Tanya. That was most educational. I think the main point to take away is that once you have a digital bank license, the practitioners can actually have huge impact if they create the right customer journey. And the 3 points that you made, ease of usage, the use case, and security. So obviously practitioners who are coming in, keeping this in mind, will be quite successful. I'm going to pivot from the international scene to the local scene and ask Aurangzeb the next question. As you know, as I mentioned, Aurangzeb is the CEO of HBL. Aurangzeb, one of the questions, I have a series of questions for you, but the first question, we've heard a lot of buzz about this license in the market, and there's a buzz that there are at least 10 plus traditional banks which are going to be applied for a digital bank license. And the question that comes to mind is, the existing regulations that exist for commercial banks actually allow them to do whatever the digital bank is suggesting they can do in terms of the customer onboarding instead of the digital lending. Why would commercial banks be interested, including potentially HBL, in applying for a digital bank license?
Yeah, thanks, Nadeem, and it's a pleasure being here with the esteemed panelists. Nadeem, as you're well aware, the banking industry has been on the digital journey over the last few years on the back of changing customer patterns, behaviors, faster, cheaper, better type of services which they now require, especially with the advent of COVID. But when we talk about digital bank license, it has to be a more holistic discussion. Of course, it has to be a nice app and interesting customer journeys. But I would go back to what Governor Bakir mentioned, where the banks have to step up in a very, very big way in terms of the financial inclusion agenda. And we need to accelerate our journeys in accessing and banking the unserved and underserved. And I would like to give an example of my own bank. With just brick and mortar, HBL got to a client base of 12 million by 2018. We closed to 2021 with a client base of 25 million. And of course, it was mobile first approach, but also the Connect platform, which was enabled by the branchless banking regulations of the State Bank, which sort of got us there. My point is that for banks with a branchless banking and large merchant acquiring presence, it is a natural evolution, because there's also an opportunity to move the deposit and the algorithm-based lending product services into a digital bank model sort of right away. From a PBA perspective, we welcome the progressive and the flexible framework that the State Bank has announced, especially around two aspects. The first one is the ability to transition portfolio that I mentioned earlier, to start with the digital bank with a strong balance sheet day one. And the second one, which is equally important, is the ability to leverage the skill set of the parent entity, especially in areas of compliance, risk, and finance, so that we don't have to worry about building the teams and structure immediately from day one. And both of these are going to be key enablers for if the traditional banks want to come in. And the last point, Nadeem, that I would make, but it's a very important point, is that for the traditional banks, it's an opportunity to partner with the new economy and bring in strategic investors with specialized skills, which is generally not possible or have not been possible in the large parent entity, because as you know, that's the reality, that these have not been seen as attractive destinations for the new economy, VC, and tech investors. So if I put it all together, I think these are some of the reasons why it would remain an attractive proposition for the banking industry to consider the digital licenses.
Thank you, Ori. That's very most articulate. So, essentially putting it all together, it essentially means that the traditional banks see the opportunity. They understand that the customer journey needs to be changed, and they feel that under the new license, it'll be easier to change that customer journey, while at the same time using the existing brand and resources that traditional bank have, And the cherry on the top is potential collaboration with new investors or existing EMIs, partnerships, so you can benefit from the innovation, because most EMIs typically are long on innovation, short on capital, opposite case for the banks, and it could make for a very happy marriage with the digital bank license. Thank you, Ari. Moving further on this question, I'm going to just segue directly into Kasif Shahid. Kasif Shahid's Finja is one of those unique companies which has a EMI license from the state bank, but also as the NBFI license, which means that it is, you know, managed by two regulators, one for the lending piece and one for the payment piece. And this has managed to change the customer journey in many ways. Kasif, would be very interesting to hear from you. How do you see this license benefiting entities like yourself who have aspirations for digital lending, but also the digital platform payment mechanism? How does the ability to raise savings further enhance the customer journey for your potential customers, whether they're individuals or SMEs?
Thank you, Nadeem Bhai, for asking this question. Assalamu alaikum, Governor Saab, Ori, Tanya, Akhtar Saab. Thank you for having me. I would start by building a bit of the context and a story. You see, you know, the 60s and the 70s is when the enterprises started to digitize their individual functions. And, you know, I'm talking cross industry, I'm not talking banking. And, you know, the examples could be payroll, supply chain automation, sales performance, etc. And it's in that time, it's through that they reinvented the customer journeys and unlocked value. Now, the 80s and the 90s was all about taking these isolated functions, which were digitized already, and then starting to have them talk to each other. These are the decades when we started to hear CRM and ERPs and all of that. And the customer journeys then were reinvented through creating these 360-degree views. Lots of value was created, disintermediation, disruption, all of that happened. And then came the 2000s. And the 2000s were all about taking these enterprises, which were already digitized, integrated, and then opening these systems up so that the customers could now access these systems, right? And the examples here are online commerce, internet banking, travel portals, hotel bookings, and all of that. Again, the customer journeys were completely, evolved, lots of disruption, lots of value creation. And now we come to the present day. What is the present day about? The present day is about taking the enterprises that are already digitized, which have already opened to customers, and now interconnecting enterprises that weren't talking to each other. And as you interconnect these enterprises, what's the new currency? The new currency is the customer data that the customer is generating himself or herself. And that data effortlessly starts to move in between these connected enterprises at the discretion of the customer. And mind you, data is like sunshine. It's not like oil. What that means is that you can use data simultaneously across these enterprises, and you can reuse that data. Oil, you just put it once, you move point A to B, it's gone. Now, bringing the conversation back to digital banks. And, we call these digital banks, but if you ask me, I think it's a super ambiguous term. Everything in the post-pandemic world in 2022 is digital. So what are these banks really? These banks are actually data banks. And these are data banks which are designed ground up to foster ecosystems which are connected. And what are ecosystems? Ecosystems are fancy words for enterprises which are interconnected. So these data banks are banks which are hosted in the cloud. They do not have expensive tech infrastructure, and they do not have legacy bank networks. And they are based on three principles. The first principle that they are based on is that they are architected ground up with open architecture. They have APIs that third parties will consume. That's number one. Number two, they're going to lead through embedded finance. What that means is that whatever services that they have, their services are going to be consumed in the apps of their partners. And number three, these digital banks or data banks are going to go out and have banking as a service or banking as a platform and offer it to fintechs, to non-banking players, to startups, so that they could go out and behave as financial institutions. Now, the big question here and the real hard question is that why did we need these digital banks or the data banks in the first place? And the hard answer is that incumbent banks in Pakistan and everywhere else in the world have found it very, very difficult to evolve and transform and reform themselves into becoming banks as platforms. They find it very difficult to transform, and for very good reason. And the reason is very similar to why the FMCGs today find it very difficult to go directly to customers, because they have invested for 100 years into direct distribution networks. The reason is very similar why insurance companies today cannot go out and go direct to the customer, because they're, they've heavily invested in insurance agents. So the point that I'm trying to make is that, the evolution for, if the incumbent banks found it easier and they would have transformed, there would not be a need for the digital banks to come in. Now, so the digital banks are going to be organizations, in my view, which are going to be designed ground up to go out and foster these ecosystems and make those interconnects and build on these three players. And I think the industry is going to come full circle, and it's on top of these digital banks that fintechs and startups and even incumbent individual products are going to run, and not the other way around.
Thank you, Kasif. That very, very interesting takeaways from that. First, I love the analogy that, and I've heard, data is the new oil from a lot of people. Totally, oil is a depleting asset. Data is not. So data being like sunshine is something that I'm going to use in the future. So thank you for that. Also, the second concept, Kashif, that these are data banks, and they will be driving their business based on data, and that's going to be their biggest asset. And I think, coming back to what Aurangzeb said earlier, if you marry the fact that existing banks, while they are constrained by legacy, have sitting on tons of data from existing customer base. So whether it's lending based on algorithms, they would be in a very good position to utilize existing data for other customers. And the third thing, coming back again, which again, the last two speakers spoke about, is the potential for collaboration. Here's an opportunity both for traditional banks, which have the liquidity, have the distribution, have the brand, and new entrants, which don't have the constraints of the legacy, coming in and, using the sum of the parts to actually create a much bigger whole, as opposed to a narrow approach. Akhtar, I'm going to come on to, up to you. And, in the licensing, with Arshad Bhatti Saab also spoke about earlier, there's the ability for existing EMIs and for existing microfinance banks to migrate to a potentially, retail digital bank. Just wanted, I think the industry would be appreciating some clarity, Akhtar, ke both the existing EMIs and existing microfinance already have a customer base. In the case of microfinance bank, they have deposits as well. And if you look at the licensing regime, there are several constraints before the state bank provides full commercial license to a applicant. So in this context, how would the state bank be looking at existing EMIs who have existing customers and existing microfinance banks moving in that transition?
Thank you very much, Nadeem Saab, and it's a pleasure to be part of this panelist, and Assalamu alaikum to all the members. So I think that this question has been debated while we were consulting with the stakeholders. So initially there was a discussion that EMI and everybody who is transmitting either from the existing arrangement, either it's EMI or it's microfinance bank, they should pass through this same process. But as you mentioned that EMI and microfinance banks, they are regulated entity of the State Bank of Pakistan. And we know each and everything about the capabilities, about their stability, about their clientele. So in the final draft, we have provided some flexibility. So the microfinance bank and EMI, they can be graduated to the next level, but they have to satisfy State Bank of Pakistan. they put up their case to us, and they have to establish that they are capable, they have right kind of infrastructure, and HR and all other qualities are sort of capability required. So if they fulfill the requirements, so those can be graduated. And that has already been clearly mentioned in the framework. So if you go through the part B of the framework, it's given in section 6 and 7. So that path is already available and very much clear that PMI and MFIs can be graduated, and certain condition and requirement can be either eliminated or can be reduced. The time frame can be reduced, condition can be reduced, but it all depends on your case.
Thank you, Akhtar. Ladies and gentlemen, I'm going to go through my second round of questions. As mentioned earlier, if you have questions, we're going to have some time for public questions as well. I only see one question in the Q&A section right now, and I don't see a raised hand. Please do start articulating your questions, and when I do call on you, please introduce yourself. Please try and refrain from making statements, but rather ask the question. If you want to direct it to a particular panelist or myself, please articulate that as well. Okay. Coming back again to you, Tanya, from the international experience side, it's quite clear that if this is done right, it can be a revolutionary step. It's quite clear that Pakistan, from a lending perspective, only has 10 million customers and the potential maybe of 100 million customers. From a saving perspective, solutions like fractional saving, fractional gold, committee systems, where the general public wants, as opposed to we as the banking industry are imposing on them, has potential. Can you articulate, Tanya, in the international space, what are some of the challenges been? Obviously, not every neobank has succeeded just because there's a regulatory framework. What lessons can be learned for potential people making the application to be wary of, given that this has happened in other countries?
Nadeem, I think that's a great point, and very important to sort of learn from other players, particularly similar markets. I think the one sort of common theme that has run across the players that we've seen be successful is that they have solved very clearly for a problem that was very specific to users in their market. So, we talk about digital banking, and it's it's neobank, challenger banks. There are 400 digital banks around the world now that have all gotten funded extremely well. But the reality is unless you're solving a critical problem, right? So you talk about Nubank. Nubank's entry product in Brazil was a small credit line credit card. And the reality is it took so long, it was so difficult for people to get credit cards in the market that's what they felt they should enter the market with. And it was a phenomenal success for them. And people just lined up. They didn't have to spend money on marketing, right? Because, the first set of people that got the cards came and said, look, I have a card. And everybody else was like, oh my God, I can now get a card in a matter of hours, let alone, be put in line and actually then be rejected at the end of the day. So I think that's number one, is to understand that if you're going to go at it and try to go create an experience that looks and feels great, but isn't solving a real fundamental problem, you're not going to see this sort of growth. I think the other things, if I have to categorize the challenges, the first one, Nadeem, and you mentioned this, is, a very large part of this is about changing behavior and changing mindsets. That doesn't happen overnight. It doesn't actually happen, very easily. And it requires, in most cases, a fair amount of investment into the user, into helping teach the user how to do things differently. And that relates to, in our case, when we're talking about digital banks here, it relates to good capital. Now, what do I mean by good capital? Like we talk about a lot of money floating around. This is the sort of investment that is needed is investment that will be patient, that will actually be comfortable with spending a large amount of money in order to change behavior without necessarily starting to see the ROI right away. And again, I'll go back to the example of a bank that has just IPO'd at $45 billion. They're still not profitable. Now, this is a mindset that your traditional investors don't understand. This is something that the venture capital industry is very primed for. So I think it's critical as we sort of look at the next few months, and as the state bank looks to award licenses, that we make sure that the investors that are coming in and backing these players will have the appetite to help, patiently change the mindset of the consumer. Then I think the other bit that is incredibly important, and this is going to be a challenge as new players come in, is you're not operating in silo, right? So you're trying, as on your side, you're looking at SMEs and consumers, but there's an entire ecosystem around you that also has to move along. We all know the challenges of moving from cash to digital, and while the list of benefits is very long, we also know why people don't want to move to digital, right? So suddenly now you're coming into a tax net, and particularly if your overarching merchant ecosystem is not evolving, you can have the best, most amazing app that makes it incredibly easy for you to make payments, but the payments have to be accepted in a large number of places. Otherwise, cash will always continue to trump. So I think these are things that across the board, as this State Bank continues to really think about the evolution of the framework, but also as players come in and apply, these are things that you have to be, I think across the board, people have to be very conscious of. Also, for new entities who will be regulated for the first time, this is an advantage that traditional banks have. They're used to being regulated, so they're used to dealing with the State Bank. For new players that come in who will be regulated for the first time, they have to very quickly understand how being a regulated entity works. Also, they have to understand that they have a role to play in helping evolve the regulation. I mean, this is not, we haven't seen in a single jurisdiction that regulation that came out stayed the way it was. It actually, as banks started to come in and come into operations, they evolved. So, so lots of challenges and lots of growth.
Thank you, Tanya. I think very interesting takeaway again from that being is one of the key challenges that we're going to experience, and I'll ask the other panelists this question is this change of customer behavior. Just because you have a digital bank license doesn't mean the customer is going to come running to you unless you create a product or a service which resonates with them. And that's going to be, secondly, that we are a cash society, 7.3 trillion swirling around, and we tax every digital transaction and cash is untaxed. So again, a behavior change is going to be very interesting to figure out how we're going to change that behavior. Pivoting to you, Ori, again, after that challenges stuff, and I'm going to just carry on something, the same question I had, which you partially alluded to. Let's say these commercial banks have the desire to change the customer journey. Commercial bank obviously have existing leverage and compliance, audit, and a whole bunch of other things. But commercial banks have obviously so far lacked in maybe truly understanding the customer journey and creating that efficiency that exists. What do you see the use cases and the success that traditional banks are going to be able to leverage in the digital bank should they apply and get a digital bank license?
Yeah, thanks, Nadeem. I think I'm going to go back to the very eloquent remarks that Kasif made around the usage of customer data. I refer to, on a lighter note, I call him Professor Kasif because we, having invested in Finja, we continue to learn about the S part of the SME from him and his team on a very regular basis. But it's really about that customer data and the opportunity to really look at this as a platform play and build a much stronger ecosystem partnership, right? Which Tanya referred to that, Governor Bakir earlier raised that as well, in terms of moving away from not built here syndrome. And what that would also allow is to move towards a more microservice architecture, which would then allow the entities to offer new products and services. And quite frankly, we need to create incentivization, right? While the customer behavior is changing, and the only way to do it is to move towards more micro segments and move towards hyper-personalized offerings, right? Which means we have to bring in design thinking at the product process interface level on the back of real-time and instant feedback from the customers. And the last thing I would say is where this customer data is going to become very, very critical is to use it effectively in enhancing the security with a much better customer experience. Because quite frankly, that's where we all struggle today. And creating that balance is going to be critical for any digital bank as we go forward.
Thank you, Ari. I think my main takeaway from that is the openness of commercial banks, especially in the digital license framework, to explore opportunities with other DFIs, whether they're existing EMIs in Pakistan or other providers who have managed to create a better customer journey, leverage their experience with the capital and the brand that the digital bank would have without their legacy constraints. Tasif, coming back to you, I'd like you to talk a little bit more about the SME side of the business, how neglected this is, how this license can potentially change that, because we've talked a lot about P2P, that, we want individuals to open account easily, get access to credit easily, use open banking to be able to use the information. But there are very few entities which are focusing on B2B, on the S of the SME, on the supply chain, on the Kriana stores, and there are obviously important stakeholders in this ecosystem. So how do you see this license and your own experience changing that customer journey and further improving financial inclusion?
Okay, so I would talk about two things. First, I would talk about briefly what Finja has managed to do under the EMI in context to these partnerships, and then the great success that we've been having on the NBFC in our collaboration with the bank. So, on the EMI license, obviously we're not a digital bank yet, but we've used the stuff that I talked about and others talked about in creating these partnerships and affecting customer journey. So number one is a company called Dukaan. Now, Dukaan is a hyper growth company, which is like Shopify. It allows small businesses, retail businesses within minutes to go and create retail fronts. And they consume now Finja disbursement and collection APIs so that they can get payments from their buyers, and at the same time they could pay their suppliers. Now, an example of embedded finance that we are already doing is with Unilever. So Unilever has an app called a Roll app, which they give to the merchants, and the merchants are now ordering from that app, and on that app is a lending button, and the merchants can decide whether they want to pay through lending or they want to pay through cash. Similarly, we work with a company called Dastagir, which is a marketplace aggregator. Again, on their app, there is a lending button embedded. We work with a company called Smart Lane, which is aggregating logistics, and it decides where the package is going to go based on success. And we allow them, the Finja rails, to open their wallets and load their pieces. So what I'm saying is that, there are limitations to the EMI license because we were created ground up to do just that. That's why we are managing to achieve this. Now, the other thing which I really need to talk about is the success that Finja is having on the NBFC side, which is regulated by the SCCP, but very much supported by the state bank. And it's here that we are becoming enablers of the banks, and we've done billions of rupees of lending throughput to MSMEs and SMEs. Every month we do millions of dollars of fresh lending. And the way it happens is that earlier we started to build these portfolios through our own equity, but now State Bank has allowed us a tunnel approval to go out and work with HBL, where what happens is that we go out and we make these portfolios, and we can lift these lending portfolios and park them on HBL's book so that our capital gets released, and then we can go out and create new loans. Now, what we are doing with HBL has a possibility for us to, of course, go deeper into various HBL portfolios, but we are having we are already working with Mezan Bank, with PMIC, with Al Falah, with UBL, so many conversations. So this is a configuration, this is an example where a NBFC is collaborating with the banks, operating in a lower level orbit, and becoming the enablers of the bank to solve the hard problem, which is to create digital lending for MSMEs.
Thank you, Asif. Kasif, thank you very much. Javed, coming back to you, two questions. The other question, Arshad may want to answer. First question is that there's this huge excitement and buzz about the digital bank license, because of the interaction the central bank had. because of events like this, why the restriction of 5 licenses only in the first phase? And is there a cap that the State Bank has in mind that they're going to issue 10 licenses, or is this based on the success of how digital bank performed and there is no inherent cap as to the number of licenses that can be issued?
Thank you, Nadeem. Arshad, can you answer this question, or you want?
Thank you, Akhtar Saab. Thank you, Nadeem Saab. This is very appropriate question. Right now, we are targeting 5 banks because we want to understand the experiences that we would have from regulatory perspective, as well as from the service delivery perspective to the target set of stakeholders, in particular the underprivileged and priority sectors, as Governor Saab has mentioned in his keynote address also. So after the results of this cohort of licensing are out and we have some sort of experience, a journey of at least a couple of years to review and see the successes and God forbid the failures of these institutions, we are still open for other sort of licenses and other cohort of licenses. There's no particular cap that or bar that we won't go for any further licensing, but it would depend upon the success of this initiative in the coming months and a couple of years. Thank you.
Thank you, sir.
Yes, Nadeem, can I add? This cap is in line with the other jurisdiction. All the jurisdiction who has recently issued framework, everybody have cap. So either it's Malaysia, Singapore, Philippines, Hong Kong. So everybody has cap. So this is not a unique for the State Bank.
Okay, all right, that's great. Ladies and gentlemen, we are allocated 40 minutes for Q&A. We are now down to 3 minutes. If the Governor Saab wishes to extend the time, I have about 6-7 questions, or I can take the first 2 questions and respond to that. So Governor Saab, do you want to stick to the original time, or can I carry on?
I think, first of all, let me thank all the panelists for a really, really very, very interesting discussion. I think, Nadeem Saab, what we should try to do is open it up for the questions that we have already received. There are some in the Q&A box, and I think one of the attendees has also raised their hands. And I would also encourage anybody else who would like to ask a question to use the raise hand feature to be able to ask a question. I'll also tell the panelists that I think on your own screens, you can have a gallery view so that Nadeem Saab, if somebody amongst the panelists wishes to say something, you could please give them the floor. So over to you, Nadeem Saab.
Thank you, Governor Saab. I will then continue. I'll start with the Q&A session. The first question has been asked by Mr. Rehan Akhtar, which is, when is the PBA expected to share the proposal for the centralized KYC framework? Aurangzeb, would you like to answer that, or somebody from the State Bank?
I'll take first shot at it. It's very much work in progress. The working group is looking at it. I mean, there's sort of 2 key aspects to it. One is covering sort of the legal side of it in terms of data privacy, etc., going across banks, number 1. And number 2, obviously, we are going to look at the technology solution, which is a blockchain distributed ledger type of discussion, which is underway. I think, as Governor Baqir said, it's well on its way, but I think it's a few months away before we can share the details. But we're working on it quite fervently.
Thank you. The second question is from Owais Dedi, and his question is, and again, a number of people can answer that. Given the new digital bank license, what's the future of the EMI license? Does it become redundant, or does the State Bank feel that it has its own niche and doesn't necessarily conflict with the full digital bank license? Does the State Bank is it looking to enhance the EMI license in any way, given that people have spent $2 million, in capital for it? So maybe Arshad, you can take a shot at that.
Thank you, Nadeem Saab. Actually, EMIs have their distinct niche market, but we can enrich their product offerings also. And we have already been engaged with the EMI license holders for offering a couple of other services, including cross-border remittances flows also to facilitate our non-resident Pakistanis. So primarily, if an entity is an EMI license holder, that's why there is an option for graduation or transformation of an EMI into a full digital bank or retail digital bank. So the first priority is that EMIs can focus on their own segment, but they have option to graduate or convert into DRB, retail bank, and then into DFB. But enrichment of their products is always open for us, and we can look into it within the legal framework of payment system and electronic fund transfer, because it has been licensed under a distinct set of legal framework. Thank you.
There was a question earlier from Jahara, which was partially answered, but I'll ask it again, and I'll ask it from both you, Kasif, and Aurangzeb. Both, please answer this. That a license doesn't equate customer behavior change. How do you, Aurangzeb, see that you're going to change the customer behavior? And then on to Kasif for response to the same question. What do you see in the challenges of changing the customer behavior from cash users to suddenly become digital users, then become part of the financial ecosystem, and then you use the use cases that you would put together and those things? So Ori, over to you, and then Kasif, please.
Yeah, I think I always use that phrase. It's borrowed from someone else. That on the COVID side, the last couple of years, as someone said, there are decades when nothing happens, and then there are weeks when decades happen. And that, quite frankly, we've also seen from our own experience. People who were absolutely hell-bent on signing checks, and they would not give authorizations and would come to the branches. The 6 weeks when 1/3 of the branch network was closed in the country, they were forced to move in that direction. But I'll come back to my earlier point, Nadeem, which is it's incumbent on the banks to create that incentivization, the use cases that we have mentioned, and if we keep that that broad theme in mind, that customers want better, cheaper, faster, and how do we sort of come up with using the data that we have to come up with more personalized solutions and make it convenient for them to come in and really incentivize. So part of it is we move probably as an industry, which is not an easy one, that we move away from incentivizing cash and checks and all of that, and maybe and bring in more the pricing regime as well, which takes us towards the digital side. But it is incumbent on the industry to actually move us in that direction on the incentivization side.
Okay, thank you. Kasif, and I think Tanya, it also be interesting because this is a key question. The enabling environment has been said, but how do practitioners change the customer behavior to get them on to this big revolutionary journey that we're hoping to see? So Kasif, and then over to you, Tanya.
Gee, I would make 2 points here. The first one, to Ori's point, look, you always need a burning platform for large-scale behavior change to happen. And the burning platform is COVID. It's the ultimate black swan. You don't have to make the case for digital anymore, whether you are a business or individual. You can't operate a business if you're not digital. You're reckless if you're an individual operating in the real world. Now, having said that, what's worked for us is that, and we've held this view for a very long time, that the ultimate use case for changing behavior is the promise of digital credit. And when you go out and promise digital credit to businesses or individuals as a consequence of them changing their inputs and outputs to digital, that becomes the biggest precursor. And we are having fabulous success in promising real-time digital credit to MSMEs and SMEs and even salaried professionals. And they're happy to go and change behavior as long as they know they have access to digital credit. That's working beautifully for us. And we plan to just keep doing that.
Thank you. Tanya?
Nadeem, what I'll say is why, of course, COVID has helped these types of businesses globally. But, let's also look at the fact that there have been lots and lots of very successful payment, banking, financial services firms that have that have successfully managed to change behavior out, pre-COVID as well. And I think there is one fundamental aspect here where if you solve a real user problem, they will come. Like that is fundamentally what it comes down to. I think the problem is we tend not to focus on solving the real problem. And that's why you end up needing to spend so much money on marketing and pushing things down people's throats. So I agree with Kasib in that the fundamental problem in this country, whether you look at consumers or SMEs, is credit. So you solve for that in an easy, efficient manner that reduces your risk, and they will come. The behavior change will happen. It's almost like inevitable.
I'm going to take 2 more questions from raised hands perspective. There are 2 people I see have raised
If
hands.
I could interrupt for 1 second, Nadeem Saab, I just wanted to make one quick comment and also a suggestion. I was gonna, as you were going to just turn to the raised hands, I think it would be a good opportunity to give 1 or 2 of them the space to ask a question, and I'll ask the host to make sure after you say Nadeem Saab whose question you will take, they unmute their mics. There was an interesting question in the chat that I wanted to read out and then say something about it. And the question is from Mubarak, and it got me thinking. It is that, does the State Bank intend on regulating digital banks to measure and deliver better user experience? The incumbent banks do not track user experience, and there is no one in the bank's senior leadership who is directly responsible to improve user experience. And then somebody else commented that it's a good question. Now, I would like to basically make the comment that our experience so far as a regulator has shown that in terms of user experience, a direct interest by the regulator is helpful. If we think about what interest a regulator should take, we want to do it in a constructive manner. And our starting principle is to be as non-intrusive as possible. At the same time, we are very open to suggestions that anybody wants to share with us as to how we can play our role as a regulator in an effective manner to measure and deliver better user experience. And I will just mention, we've had both examples. As many of the participants would know, we recently started a program for housing finance, affordable housing finance. And this is Mera Pakistan, Mera Ghar, which gives credit at affordable rates for people who want to buy small houses, 5 or 10 marlas. In that, our experience was that a lot of push and a lot of interest was needed by the regulator to get the ball rolling. Now that the ball is rolling, we are finding that that incentive is being internalized by the banks. We have another approach, which is the SME collateral-free lending program. And that essentially is using the principle to give a lot of incentive to banks and also not make it mandatory in all banks, but asking them to come to us with a proposal, giving them adequate incentive and letting them run with it. In both, we are now getting good response. My purpose of sharing this is to actually turn the question on its head and ask Mubarak, Brandon, others to separately reach out to us. You can reach out to Arshad Bhatti, and you can tell us what is a good way that we can, on the one hand, not be too intrusive, but at the same time, make it clear that for the regulator, it is going to be extremely important that banks, and whether it's digital banks or traditional banks, do deliver better user experience and that we have a system of tracking it. So I just wanted to make that one comment about this question because I found it to be very, very pertinent to the goals that we are trying to achieve. And back over to you, Nadeem sir.
Thank you, Governor Saab. I saw that question and I thought it was a very interesting question. As you've clearly mentioned, you're open to feedback. My response typically is that when customers don't find the journey easy, they walk with their feet, and that's their voting power. And regulations don't necessarily provide the support you're looking for. Customers decide if the customer journey is valid or not. Coming back to the three raised hand, I'm going to ask Mr. Tawfiq, who's raised his hand, if my co-host can unmute him so he can ask the first question. Please ask a question, not a statement. And if you want to direct it to one of the panelists, including the governor, please feel free to do so. Is Mr. Tawfiq still around? Okay. Till that gets done, the other raised hand was Mr. A.M. Khan. He had a question. And again, I'll ask my co-host to unmute Mr. A.M. Khan so he can ask his question.
For financial inclusion, what is the SBP's plans for providing access to the people of merged areas and remote areas, Balochistan particularly bordering with Afghanistan? Thank you, sir.
Thank you. Any from the State Bank would like to respond to that, please?
Gee, I'd like to ask Arshad Saab to maybe talk about it, because one of the key goals that we do have is the provision of credit to underserved areas. We do so a lot in, for instance, agriculture, where we give explicit targets to banks about promotion of agricultural credit, particularly in areas which are not well served. But Arshad, perhaps you could share a few more thoughts.
Thank you, Governor sir. We have been already engaged with the banking industry to provide financial services and access to finance to different stakeholders, in particular in the remote areas of KPK and Balochistan. And in the recent past, we had a lot of interactions with the stakeholders physically there. Prior to COVID, we had physical interactions in Quetta also, and Peshawar also, with the stakeholders to ensure that they provide financial services to different set of stakeholders. And we have also provided them an indicative set of say targets. It's not a hardcore targets like we have for ACAC, but indicative targets that they need to encourage and reach out to their customers. But we are still we understand that the need of these stakeholders is still unfulfilled to a larger extent, and we are working on different technology-based solutions, and that's why this digital banks is one of the key solutions for providing such access to finance to remote area customers. Over to you, sir, if you want to add something.
Thank you, Arshad Saab. I have another raised hand of Mr. Yasir Rashid, who's put a question but also raised his hand. So if Mr. Yasir Rashid could be unmuted so he could ask his question.
Yeah, thank you very much, sir. My name is Yasir Rashid and I belong to eMandi, which is a tech platform working in agriculture. So I have got two quick questions. One is why existing banks are being allowed for this license while they can perform all kinds of banking services with their existing mandate. So what is the reason, especially when there are only 5 licenses? And my second question is that what are the SBP efforts to convince government for digitizing its payments? Because as we are talking about the incentivizing the customers and especially the FBR, because one of the biggest challenge that we are facing through our tech platform in agriculture and SME are the reason people are avoiding the documentation. So what are the SBP efforts to incentivize the people to get into digital side of the banking and get the benefits or tax benefits and all that kind of stuff? Thank you very much.
I'll take care of the first question, Yasir. Yasir, if you were listening, Mr. Mohammad Aurangzeb very clearly articulated why there was a potential or a desire by the traditional commercial banks to apply for a license. Secondly, from my viewpoint, there are 5 licenses being issued, and at this stage, we don't know who's going to get a license. So it was up to the State Bank's committee to decide which entity, whether it's a traditional commercial bank or EMI or an international entity, which is going to make the most impact. So just because the licenses are open doesn't mean all 5 licenses are going to a particular category. But I think Ori did make a clear argument as to why digital bank should be considered for applying for a license. For the second part of the question, I'll come back to Arshad or Akhtar as to what the State Bank is doing in this whole, which I mentioned earlier on, cash is untaxed. Every digital transaction is taxed in every way, whether it's sale tax, whether it's FED, or any other form of possible taxation. So there's a huge disincentive. I know in the various meetings I've been with the State Bank, the FBR chairman has come in as well, and the State Bank has taken requested, leniency in some taxation on digital transactions. But I leave it to Arshad or the Governor Sahab to nominate somebody to further respond to this query.
I think Arshad should take the question, and then I'll make a comment at the end on this issue of tax and cash and non-cash. Ji Arshad.
Thank you, Governor Sahab. Yasser, you would know that State Bank has been engaged with all the set of stakeholders for improving digital transactional domain, and we have carried out a lot of initiatives in the recent past. And RAST that has been launched recently is one of the key enabler for providing B2B, P2P, as well as G2P and P2G payments. And apart from RAST, we are engaged with FBR for digitizing various payments, and you would delight to know that all sort of digital channels are available for payments to FBR right now. And if I want to pay my taxes through digital channels, I can do so instantaneously. Apart from this, we are also engaged with the FBR and other stakeholders to digitize the trade-related transactions of the customers, cross-border trade-related transactions under Pakistan's single window domain. So this would certainly expand to other set of transactions that you are referring to, that is the farm to market transactions and like. But from the taxation perspective, we have also initiated a lot of dialogue in the past with the FBR, and there have been some successes there, but I'll leave it to Governor Sahab to respond on this issue. Thank you.
Yeah, I'd make two comments. One is that there is a regular digital financial services stakeholders group meeting that I chair, and in that forum, we get together the heads of the various government agencies, including FBR, the Pakistan Telecom Authority, and others, to coordinate on exactly issues like these. And I think there's been some progress on some taxation-related issues, and we welcome further suggestions. The second point that I want to make is that, we have commented elsewhere that we are in the early stages of also thinking about the usefulness and the possibility of central bank digital currency in Pakistan. One of the areas that we are thinking about is the right approach, one which is a token-based and the other which is an account-based. And the challenge that we have is the following. On the one hand, account-based gives better visibility, is better for AML, CFT, is better for security, for fraud protection, and so forth. And adequate laws and regulations can be created such that customer privacy concerns are kept paramount and in accordance with best practices. However, we have at the same time behavioral norms, and behavioral norms are one where anonymity that cash brings in transactions is highly valued for various reasons. And a call that has to be made is which of these considerations to prioritize. A token-based system is one, which would essentially replicate cash while affording a lot of the other benefits of digitization. But on the other hand, if the system evolves in such a manner that there is no option for people but to use a digital payment system, or it is so attractive to use it that people then do not mind using even an account-based payment system. One possible way out, for instance, in countries like Indonesia, where they have had very rapid growth in digital payments, is that in terms of number of users, a very, very large number of users in Indonesia are such that they are well below the income levels to even need to file a tax return. And for all of them, the convenience of a digital payment that it brings is far more important than any other considerations taxation. And the fact that they use a digital payment system to make payments then creates that kind of data that can allow other providers, whether they are digital banks, CMIs, or others, to then offer solutions for credit. So my point is that perhaps the concern that an account-based system would deter use is overblown, and that perhaps for, in terms of number of uses, there could be a case where digital payments are used very proactively because they are very, very attractive, and most of the users who are using them are at income levels where they are not even required to file tax returns. These are just some preliminary thoughts, but again, further suggestions on these are welcome to us, including to Arshad, who is with us, and to Sohail, who is our Executive Director in charge of digital financial services. Nadeem sir, perhaps we could take one more question from this audience, and then I believe there may be some representatives from media, and I would ask you to moderate that discussion as well, and ask whoever has a question from the media to first clarify who they have the question for, and then perhaps we could give 10 minutes for that.
Governor Saab, I've gone through the Q&A list, and the questions coming out have either been answered or very similar to what we've discussed. So I think it's time now to move on to the media, and then I would do a short wrap up and hand it back to you to, for a final say, if that's okay with you.
Yes, please go ahead.
Gee, people from the media, are they raising their hands, or are they going to the Q&A session? I can unmute their mic if they have a specific question. I'm waiting for the media segment to, either raise their hand or respond on the Q&A side. I'm not seeing any traction, Governor Saab, either on the Q&A or the raised hand side.
Perhaps we are having some technical issues, but in any event, maybe it's time then to bring the session to an end. Let me actually thank you, Nadeem Saab, for doing an excellent job as a moderator. Let me thank all of the panelists. Aurangzeb Saab, as the president of a very dynamic bank and the largest bank in Pakistan, and also in his capacity as chairman of the Pakistan Banks Association. Tanya Adrous, who doesn't need any introduction, has become a very, very well-known personality in digital Pakistan, did tremendous work when she worked in the government as well in digital Pakistan. Professor Kasif Shahid, as Aurangzeb Saab referred to you, you are also a very, very highly respected personality in our financial system, and also one who has had a very good partnership with the State Bank of Pakistan in the work that you are doing. Our very own Akhtar Javed, who has toiled hard to create this digital banks licensing framework. This conversation was intended with one goal. And that goal, I want to remind everybody at the end, was to bring awareness to the digital banks framework that we have created. I'll remind everybody that that framework is available on our website. I'll also remind everybody that we have given 3 months to accept applications for digital bank licenses. Let me just end by reminding people our goal as a regulator. We view Pakistan's financial system as one which is profitable and which is sound. It is also a system that is not yet reaching its potential in being able to facilitate the people of Pakistan with their needs for access to finance. We are hopeful that the journey that we are starting with the licensing framework for digital banks will help us to achieve these goals, but also will create opportunities for traditional banks as well as potential new digital banks to further evolve the banking space of Pakistan and also generate a handsome return for their investors while doing so. Thank you very much for everybody who has joined today's discussion. Khuda Hafiz.
Khuda Hafiz.